In this video, traders, we're going to look at avoiding that deadly boredom trade. Stay tuned. Hey guys, warm welcome to you. Right, so we've all been there, we've all done it. Sitting in front of the screens, maybe we've been very patient in the morning. We've had a great opening day, a great opening trade, great opening drive, or maybe not so good. But now we're sitting in front of the screens, we've got a screen sitting there, we've got a chart ticking away, little flashing from time to time, and we're kind of looking around. Maybe we've done some other browsing, maybe we've kind of looked at some other bits and pieces on the internet, maybe we've been reading a book, maybe writing a journal, twiddling our thumbs a bit thinking it's lunchtime soon. Maybe if you trade from home, you've gone to the fridge, looked in the fridge and see there's no food, come back, got the 5th coffee of the day, and you're sitting there. All of a sudden, the market has a little flurry to the upside, and you go, aha, we're about to do something. You instinctively hit that long, off you go, you're long, you're rubbing your hands, got some action now, you start to look, then it just tickles down and it just goes dead. Starts to drift lower, drift lower, drift lower. Angrily, bang, close the trade, storm off, get annoyed, have undone all that good work in the morning, and now you're in a position where you really don't want to be going into the afternoon trade. We've probably all been there as day traders, guys. If you've been there, give it a thumbs up to appreciate that, because it's human nature, right? We know, we talked about this before, you've got that little guy sitting there saying, if I'm not going to trade, I'm not going to make money. If I'm not going to trade, I'm not going to make money, so I've got to be trading. And then you've got the other one saying, listen, if I trade, I can lose money as well. And we sit there and we're sitting in front of the screens. And of course, another thing is that if you've got charts that are auto scaling, which I recommend you do not have on, if they're auto scaling and you've got it on a 1 minute time frame, for example, if you're day trading, all of a sudden, as we start to get in a very narrow window, the scale starts to widen and widen and widen. Or before it was maybe 100 points wide, the scale. Now it's like 30 points wide. You see a spike, you think there's something happening, you wait for a little pullback, you're in, you're not looking, you're not calculating, you're jumping the gun. And that's purely because we've got something in our mind saying we need to trade, need to trade, need to trade, need to trade, need to trade. So avoiding it is key, guys. If I haven't stressed it, if you haven't guessed it, it's absolutely key. We cannot be taking boredom trades. If you take one from time to time, you'll probably get away with it. The occasional one, we need to aim to have 0, but occasional one isn't probably going to kill us. But it's when it becomes a habit, because what happens is we can take a boredom trade and we get rewarded for it. So as we get rewarded for it, we think, well, I'm actually quite a good lunchtime trader. Look, I just made £500 from just before I had my sandwich. And so you've got to be strict about this. And the easiest way to do it is to be very clear on the times of day that you can trade. And if not the times of day you can trade, the type of volatility you can trade, the type of volume you can trade, some kind of filter, whether that's time, whether that's price, whether that's ATR, that says, hey, I won't trade under these conditions because I know I'm trading out of boredom. I know I'm trading because there's nothing happening and I feel the urge for some action. I feel like I should be doing something. So some things you can filter on, and we talked about this a couple of times before. Average true range. If you're trading on a short time frame, what's your average true range of your 1 minute candle, your 5 minute candle, your 15 minute candle? If that starts to shrink or your range starts to shrink, don't have that on too a high number, because by the time it shrinks down, or by the time it actually responds, if you've got it on something like 20 or 30, it's going to be too late and you're going to be into the afternoon session. So have it kind of maybe 1 and compare it. Something like that. So the range, so you're not getting involved when there's a small range. Volume is another good one. What's the volume like? Plot an average volume on your volume, a moving average, should I say, on your volume, 5 period. If you start dripping, or to a 20 period, if you start going below that, don't trade. What about something like total range over a certain period? So again, even if you're trading on a 1 minute time frame or 3 minute, look at a longer time frame, a higher candlestick, higher time frame candlestick, to say, well, yeah, maybe the 1 minute is reasonably active, but we've actually not gone anywhere. It's been chopping around doing nothing. And the final thing, of course, guys, is the time. It's very simple that we know that lunchtime generally is quite quiet. Lunchtime is not really the time to be taking breakouts at fresh highs, unless of course there's certain things that override it, like a news catalyst, like some kind of earnings, like something that's causing a real rocket ship of a move. Generally speaking, if we're kind of stretching the day and we're heading to midday, we tend to, and it depends on the time when you're watching this, we tend to mean revert back. We don't tend to explode up. or if we do, we tend to pull back pretty quickly. They're just into the current market conditions. Maybe they're different at the time you're watching this, but you get the idea. The point is you frame it around what you expect, and then you just stick to the rules. You say, right, listen, it's lunchtime now, it's volume's this, screens go off, let me go and do something else. Have something else to do as well. I think that's the big thing is, as traders, very often we don't have something else to do. We don't have something we can go to. Maybe we'll read a book, maybe this, but if there's something else that we can get involved in, then it will take our minds off the markets. We can get involved in that. Exercise is a great one. Gym, swimming, jogging, all that kind of stuff is a great thing to be doing, but at least it takes your mind off it. Like, right, I'm going to the gym for a couple of hours, going out for a couple of hours. It means that, yes, you might miss something, but the chances are you're going to do so much better for your account because you're not going to be trading out of boredom. So anyway, guys, avoiding the dreaded boredom trade. It can creep up on us and it can do some serious damage if we let it. So don't let it. Take care. Bye-bye.